day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the June 2023 inflation rate and MPC meeting expectations. Last week, the National Bureau of Statistics (NBS) released the June 2023 inflation report. The report showed a prolonged rise in Nigeria's inflation rate. Headline inflation for June came in at 22.79% year-on-year from 22.41% in May 2023. The slight increase in inflation came as a surprise due to the spike in fuel prices following petrol subsidy removal in the month under review. However, the MBS explained that the inflation rate for June did not fully capture the impact of petrol subsidy removal, as data collection for the computation of inflation stopped in the middle of the month. Hence, the full impact will be captured in subsequent months. That said, inflation at 22.79% is frightening, as it's the highest since the rebasing of the Consumer Price Index used to measure inflation in 2009. The average inflation over the past 12 months was 21.54%. On the month-on-month basis, the prices rose 2.13% in June, the highest month-on-month increase since May 2016 from 1.94% in the previous month. As expected, food inflation, the major driver of inflation in Nigeria, was 25.25% for June 2023, higher than 24.82% recorded in April 2023. On a monthly basis, food prices rose at a faster pace of 2.4% from 2.19% in May 2023. This can be attributed to the increases in the prices of oil and fats, bread and cereal, fish and potatoes. In a similar trend, core inflation, which includes energy prices but excludes food prices, rose by 0.21 percentage points year-on-year to 20.27% in June 2023 from 20.06% in May 2023. FX devaluation/depreciation is one of the major drivers of core inflation, as this directly feeds into the prices of petroleum products, vehicle spare parts, and importation of medical equipment. We expect the inflation rate to sustain its upward trend in July due to the continuous rise in fuel prices and depreciation of the exchange rate. Ahead of the MPC, the 4th Monetary Policy Committee MPC meeting for 2023 will commence today. Recall that at the last meeting in May, the MPC members voted 10-1 to raise the benchmark rate by 50 basis points to 18.5%, the 7th rate increase in the last 12 months. Given the persistent rise in the inflation rate and the stance of the MPC to rein in inflation using the MPR, we envisage a further hike in the monetary policy rate by about 50 basis points from 18.5% to 19%, notwithstanding the government's desire for a lower interest rate. However, we expect a reduction in cash reserve ratio (CRR) to increase liquidity in the banking system. Tightening and easing at the same time are contradictory policies that the CBN must correct over time for its policies to be effective in moderating inflation. The increase in MPR has not impacted fixed income yields due to high liquidity in the financial system, and it has not helped in strengthening the currency. However, it impacts the interest rate on loans for subprime borrowers, even if slightly, and the interest earned on deposits for savers. For most SMEs that access loans at a floating rate subject to the change based on the MPR, this would increase the finance costs, which may impact their profitability. Lastly, interest on savings accounts will improve, pegged at 30% of MPR, which is positive for savers. Investment strategies to hedge against inflation. Amid the unrelenting inflation rate, investors are implored to increase their risk appetite to bridge the wide gap between inflation and returns in the market. For instance, rather than leave your funds in your savings account, you can open a high-yield savings account to save on reputable platforms with high returns. Also, you can participate in more commercial paper offers with a good credit rating rather than treasury bills. Additionally, investments in dollar-denominated assets will also provide a hedge against inflation due to the persistent depreciation of the naira. For investors with high-risk appetites and long-term horizons, we still expect more upside in stocks with strong fundamentals, as well as consistent and high dividend returns, which represent opportunities that can also be explored. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.